we are in a growth industry. And by the way, it looks like it's going to be double-digit growth in 2011. So after what all of us have been through in the last 4 or 5 years, I think that should bring a smile to your face. And I always remember having gone to Notre Dame and watching Eric Parsegian. I'm going to date myself, but he had a losing season. And one of his famous quotes was, well, in a losing season, that's the time when you really build character. And I think all of you going through what we saw during the financial crisis and all the things that we learned about the industry really sets the stage for being innovative and taking the opportunity for the growth that we're going to see in the years ahead. So with that, let me snag the first slide here and just briefly summarize what our outlook is for 2011. We do expect global growth between 3 and 4% this year. The economic fundamentals really look favorable in most markets. For example, we do expect a recovery here in the U.S. rising toward the 4% range. I think the tax cut package is very supportive. And many of you know that buried in the package is 100% business expensing for businesses in 2011. In fact, it was retroactive to September 8th of 2010. And that should be supported, maybe backloaded this year, but should be very positive for commercial vehicle sales this year. So I take a look at that. We looked at its impact in terms of what it would represent as an incentive for a business. And at present, we think on the conservative side it could add as much as 50,000 units to commercial fleet this year. Could be more than that. And again, it will partly depend on the gift that keeps giving. If growth starts to get some momentum, and small businesses in particular see that pickup in their end markets, well then of course they're going to take advantage of that 100% business expensing. By the way, Canada, Brazil, and Asia, growth positive. Many of you have seen the headlines in terms of rising interest rates to tame inflation in those markets. We think that's going to bring growth down from the very robust rates that we saw in 10, but still very strong. I think that's the headline for some of those newly developed markets. And just in terms of overall economic policy, still very supportive with low interest rates and in some markets liquidity programs. Now in Europe, the outlook is certainly mixed, and I'll talk about that a little bit more. We are seeing a lot of budget cuts in those periphery markets and restructuring at banks. And then in UK, Germany, France, and other markets, they still look to be in a growth mode, although I was a bit concerned about the UK service sector Purchasing Managers Index release for December. That was down below the 50 level, which means contraction over the next 3 to 6 months. But some of that is because, as you know, UK had to implement a VAT tax increase in January from 17.5% up to 20%. So we're in a little bit of a transition in terms of the UK economy, and we'll have to watch that very closely. Key takeaways: global economy is reaching a dynamic phase. We've got incomes in many emerging markets reaching a very good level for affordability of vehicles, and I'll talk about that. And then finally, just this phase of economic development. I think it's really a 10 to 15 year, very special period in economic history where we see so many people worldwide reaching affordable levels where they want to buy a vehicle, they have the ability to do so. So, and who are those? Well, look at this slide on the left. I keep this on my bulletin board in my office. 5 billion drivers in 2009, rising to 5.7 billion people, potential drivers by 2020. Look at that growth on the right panel. Mature markets, you know, they're growing too. 5% growth in the decade, representing about 14% of all drivers worldwide. Of course, you know the story about China and India, 13% growth, representing 37% of all potential drivers. But other markets, 21% growth. There are some very dynamic markets out there, jewels, that you sort of have to find in the nest. And I've given you just a short list. There turns out to be about 50 of these markets. We disaggregate China and India into 3 separate markets. But you can see many of these markets reaching those per capita income levels between 5 and 15,000 on a PPP or purchasing power parity basis. And that's the point of inflection where the growth of vehicle ownership rates far exceeds GDP growth for that country. So you have just a very sizable uptake. And it lasts for a period of time until you see the maturation in the market and you arrive at the point where buyers start going out and replacing their vehicles. You get a little bit of a tipping point in terms of not as many first-time buyers, but this will last a while. I mentioned 50 markets, and just to give you an example, there's a lot in North Africa. We've got Egypt at the takeoff stage. They've got 53 million potential drivers. Romania is also there, Belarus, Azerbaijan, Angola, Tunisia, Uruguay, Costa Rica, many of these markets. And you can see just the ones here are 27%, but if you add all of them up, it's a very, very sizable percent of overall population in the world. And just to give you a sense of what the potential is, this slide shows what we call density, which is numbers of vehicles in operation per 1,000 drivers. And of course, on the lower left panel of this slide, you can see India and China at very low mobility rates. Rising, you can see Brazil at 192, that's still relatively low, all the way up to the mature markets at 600, 700, and then of course the US. Now the US has slipped a bit below. This is 2008 data. But you can see how dynamic this potential is if you get ownership rates even doubling or maybe tripling. It adds significantly to the demand for new vehicles. Now, just to come back, because I wanted to share with you those population dynamics before I talked a bit about growth. And you know, after this severe financial crisis, we are now poised to see some improving fundamentals. And I think we do see it in the US in particular after a very tough 2010. Although I will say, you know, 2010 could round out to be about a 3% growth rate. And you know, that is not bad by historical standards. And you can see Russia fairly strong, Turkey coming off a very robust 7% growth rate in 2010, all the way up to a China growth rate of about 9% in 2011. Now, in terms of worldwide industry sales, in 2010, our current estimate is 73 million units of sales. Now, that includes medium and heavy-duty truck sales as well as cars. And you can see that recovery now exceeds the prior peak in sales in 2007 at 72 million. And I guess what I am suggesting to you is that we are potentially on the cusp of seeing